Today we're going to talk about the basics of debits and credits. We previously learned how to analyze the impact of business transactions on the accounting equation, and we learned that the accounting equation stays in balance after each transaction. I've listed some sample transactions here as a review. However, this method can get very cumbersome with multiple transactions, as you can see here. Businesses need a more efficient way of recording transactions and keeping track of the balances in their asset, liability, and equity items. So instead, we're going to use a system of accounts to record business transactions and to keep track of the balances in each asset, liability, and equity account. Here we have a cash account with all of the increases listed on the left and all of the decreases to cash listed on the right. This makes it easy to calculate our ending cash balance, which in this case is $16,000. Businesses keep track of accounts using computerized systems, but we're going to learn accounting by looking at simple accounts like this one, which are called T accounts. In accounting, we use special words to describe the amounts written on the left and right sides of the accounts. These words are called debits and credits. Debits always go on the left side of an account, and credits always go on the right. A good way to remember this is to notice that the word credit has an R in it, and therefore credits go on the right. Now, one thing that is very important to understand is that debits don't always increase and credits don't always decrease an account. It depends upon whether the account is on the left or right side of the accounting equation. On the left side of the accounting equation, debits increase the accounts and credits decrease the accounts. But on the right side of the accounting equation, the opposite is true. Debits decrease liability and equity accounts, and credits increase them. This sounds complicated, but all you really have to remember is two things: the accounting equation, which is assets equals liabilities plus equity, and the fact that debits go on the left and credits on the right. Then, if you think about it, if you want to make an account bigger on the left side of the accounting equation, you will debit it because debits go on the left. If you want to make an account bigger on the right side of the accounting equation, you will credit it because credits go on the right. Once you remember these rules, it's easy to remember that you will do the opposite to decrease these accounts. So to decrease an asset account, you will credit the asset account. And to decrease a liability or equity account, you will debit the account. Next, let's talk about a step-by-step process for analyzing transactions using a system of accounts. The first question you will ask is which accounts are impacted. Next, did the accounts increase or decrease? And finally, which accounts will be debited or credited? So if we look at a sample transaction where a company paid $10,000 cash for equipment, we first ask ourselves which accounts were impacted. So cash and equipment were impacted by this transaction, and the accounts changed. Cash decreased because we paid cash, and therefore we have less cash, and equipment increased because we purchased new equipment. Finally, the accounts that are debited or credited, we will determine by thinking about which side of the accounting equation these accounts are on. Well, both are on the left side because both cash and equipment are asset accounts. So since equipment is increasing, and because we debit an asset account to increase it, we will debit equipment for $10,000. And since cash is decreasing and we credit asset accounts to decrease them, we will credit cash for $10,000. You'll notice that after our transaction, our debits equal our credits, as they always will if we've recorded the transaction properly, and our accounting equation remains in balance. Both accounts happen to be on the left side of the accounting equation, and one account, cash, decreased, while the other asset account, equipment, increased. But our accounting equation is still in balance. Let's look at a second transaction. Here the company bought $2,000 in supplies on account. The accounts impacted are supplies and accounts payable. And I know that accounts payable is impacted because I purchased the supplies on account, meaning that I haven't paid for them yet. I've purchased them on credit, and therefore I've incurred a liability called accounts payable. So my supplies account increased by $2,000, the amount of supplies purchased, and my liability account also increased by $2,000. And since both of my accounts are increasing, I will debit supplies because supplies, the asset account, is on the left side of the accounting equation, and therefore we debit those accounts to increase them. And accounts payable, my liability account, that's on the right side of the accounting equation. So I'm going to credit that account to increase it. After recording my transaction, my debits equal my credits, and the accounting equation is still in balance. I have an increase on the left side and a corresponding increase on the right side in the liability account. In conclusion, we just need to remember these two things: the accounting equation and the fact that debits go on the left and credits go on the right. And with that knowledge, we can determine which accounts to debit or credit for business transactions.